Yo, I'm Brendan. Today we're going to talk about the Sofi Investing app. Is it worth using? Do they have too many features? Is it too complicated? Or are they really just covering the bases of what an investing service should cover? They offer a lot more than the kind of bare bones investing services that I talk about a lot of the time. They're not in that minimalist camp, but they're also not in the maximalist camp of interactive brokers. So who is Sofi Investing for, and is it worth using? Let's find out. Well, Sofi got started way back in 2011, and it focused largely on loans and specifically student loans for the first few years. Finally, in 2019, they offered Sofi Money and Sofi Invest, and that's where I come in. So who's Sofi and why have they structured their service the way they have? They go into a bunch of detail on their website about their values and what defines them. Their number one value is putting their members first, us, people who might use their service. They want to solve problems quickly, they want to embrace diversity, they want to get to the truth, be selfless, and when in doubt, do the right thing. A lot of feel-good kind of values here, but let's see if that comes through when it comes to their product offerings or not. Right off the bat, we can tell that Sofi is really designed for the average retail investor. They're not meant for professionals, institutional investors, people who want to get into really super complex things. They're making this an investing app for the people. It's easy to use. It can be automated. Plus, they incentivize you to get up to $1,000 in stock whenever you fund a new account. So they're really going after the average Joe when it comes to investing, and that's really you and me. Probability of customer receiving $1,000 is 0.028%. Probably not going to happen. You're probably going to get $5 or $10 in stock. And right here, we also get our first sneak peek of what their user interface really looks like. It's pretty standard stuff. You've got your charts on the top talking about what your account's done lately, your accounts in the middle because they offer a bunch of different kinds of investing accounts, and then at the bottom, your basic navigation. So it seems pretty clear and intuitive so far, but let's get more into the features and the products that they're offering here. What can we do through Sofi? Well, the first option we have up here on the toolbar is active investing. When I read active investing, that tells me that they're not intending this to be passive. They're thinking that we're going to use this as like a trading platform and potentially have a lot of activity on here, but it's also self-directed, so it's not somebody else managing our money for us. It's us in control doing whatever investing that we want to do. That's exactly what I would expect them to offer. And I would also expect them to offer zero commission trading, even though there are other fees and things to know about. They're going to help us to learn by providing some information in the app. We can allegedly join a community with other Sofi members at exclusive events and experiences. Sounds terrible to me. I wouldn't go to those, but that's just me. Of course, as I would expect, they offer fractional shares, so you can invest with as little as $5, and this pie looks absolutely terrible. How do you make a pie with all these different flavors? And one of these sections is literally like clear gelatin with some kind of red fruit suspended. This looks awful. Hopefully their investing products are better than their pies. It looks like very standard levels of information when it comes to investing news and content and relevant data to what we're investing in. This is what I would expect from basically any decent investing app. They're going to give us some information about the stock market. Okay. Another very standard vanilla feature that I would expect to see is margin investing. Doesn't look like their rate is that great at 10%. What this just means is you can borrow against the value of the money you already have invested with them, take out a loan against yourself essentially, and then use that money for whatever else you want. Buy burritos and race cars, invest more money, do whatever you want to do. Doesn't look like anything too special there, but this feature does look a little bit more special, and that's their attempt to make trading options an easier experience. So they say it's a new feature, and it comes with an in-app trade guide and a range of educational resources. So if we click into this to dig it a little bit deeper and see what exactly are they doing to make it user-friendly, it looks like they're just giving us a basic explanation of what options are. So they're going after a clientele who doesn't know what options are, or maybe are options curious but previously inexperienced. And then it promises that we're going to have a user-friendly design that's both for desktop or phone. We're going to have some resources. We're going to not pay contract fees, and we'll have one click to access data. And then they give us a little picture of the screen here so we can set up calls and puts. And then it looks like within the app, they're going to give you some kind of built-in explanation of what the heck you're doing. So they explain that if you think it's going to go up, you might buy a call. If you think it's going to go down, you might buy a put. And right now, they're the only option strategies currently available with level 2 through Sofi Invest. But I feel like this is a tricky one, because if their intent is to prioritize their customers first, or whatever they labeled us before, then offering us something like this and creating this user-friendly, beginner kind of friendly experience, I don't think is actually in our best interest when it comes to the statistical odds of us making money doing this. And so I think there's two perspectives on whether or not this is kind of worthwhile and a good feature for Sofi. A, it could be a terrible idea for them because it could go against their core values of taking care of us. This could mean that they're getting more fees for processing these options trades. It could mean that they're going to make more money in the end because this is another vehicle for them to essentially earn money on the back end, and then they can be totally carefree whether or not that makes us money or not. Who cares? Whether we choose to invest is up to us. If we choose to do this really risky thing, it's our fault if we lose money. That's water off the duck's back. Who cares? And so if that was the case, then I wouldn't wouldn't support this. I would think that this is actually antithetical to who they claim that they want to be. And the average person, if we have to learn what options are within the investing app that we're doing options through, we probably shouldn't be using options. However, if option 2 is true, then this could be in line with their integrity, which is maybe they've had people beating down their door, blowing them up on their contact us section saying, guys, we need options. We love SoFi, but we don't have options. You've got to make this happen. If they didn't have options before, now they added them, maybe that makes their client base happy. If you're using SoFi now and you have an opinion about options, then leave me a comment below about it. Because if anything, I'm leaning more towards the former, that it's just another way for them to make more money and not actually help out their customers, than the latter, which is, okay, fine, we'll give you what you want. You've been asking for it. Here you go. Let's continue with what it looks like to invest just on your own through SoFi in kind of the most basic way. This is still in the active investing part of their service, and they're now offering alternative investments for the rest of us. This seems like a fairly popular thing for these kind of hip apps to start offering. Like Public is doing this, they're doing this. I'm sure there's others out there that I'm missing that are doing this. So let's dive in and actually see what kind of alternate investments there are and whether or not it seems usable, fun, worthwhile. I will hand it to their website designers. They've got some cutesy, interesting graphics here, but that's not what we're here for. It says that to previously invest in these kinds of alternative investments, you had to be super high net worth. Now they've brought down these potential things for us to use as regular people who aren't super high net worth. So now I want to know what kind of alternates we can actually invest in. It says we can pick from a range of categories like commodities, foreign currencies, private credit, hedge funds, venture capital, and real estate. So these are slightly different kind of alts than is on Public. Like Public has kind of IP sort of things like the music from the Shrek franchise, artwork, weirdly investing in like culturally significant things like certain shoes. That's like very, very alt version of alts, where this is still in the world of kind of finance, but these aren't typically things that we would have access to or invest in when it comes to stock market investing or investing on anything on our phone. Like that's not something that we're going to ever have access to typically. So they are actually bringing something fairly unique to us when it comes to this. From what I understand, a lot of times these different alternates require a different investing structure than typically, because when you're buying a stock, that whole structure is set up. You buy a piece of the company, you receive certain benefits for owning that piece of the company. It's sort of set in stone and fairly simple. But if you're going to be somehow involved in a real estate investment deal or be part of private capital whenever it comes to starting up a new company, like how exactly do you structure that deal? And because that's more complicated, the structure can actually dictate whether or not it's worth participating in. Because if you're like the lowest person on the totem pole, which I would assume you are on this, it might be a lot less attractive than it seems. So it looks like we've got 3 different options. You can invest in a mutual fund, which for our sake would feel very similar to investing in any other mutual fund. The difference for us would be this would have stocks, bonds, and then some of those alternative assets all part of the mutual fund. So you could do this if you just said, hey, I want to diversify into something that's not necessarily correlated directly to the stock market like everything else is. Give me a bit more diversity, but don't force me to kind of learn anything new or understand anything extra. Just make it in a mutual fund. That seems interesting. Then we could use interval funds, and it says these are going to give us opportunities to get into venture capital, private credit, and real estate. And then these give us scheduled selling windows for added control. What little exposure I have to these kinds of things in real life tell me that typically these are very illiquid. So whenever you jump into, let's say, a venture capital deal, I'll put $200,000 towards the development of this new app. You probably sign on a dotted line somewhere that money is essentially locked away until some kind of metric is hit or until some kind of time limit has expired. Like maybe we'll check in 3 years and see what's happened. Or once we quadruple in size, then we'll have an opportunity to readdress or whatever. And the same thing could go with private credit or real estate, because what we're doing whenever we're doing these things is literally funding the development of this business enterprise. And that doesn't happen immediately. And it's typically something that's in progress. It's happening right now. The company is growing, the real estate is being built or managed or whatever. And so it's different than the stock market where a company is already established, they've had an IPO, and now we just jump on that bandwagon. These bandwagons are like still being built a lot of the time. And so that naturally means that the money needs to sit with them for a longer amount of time. So we can't just put it in and pull it out like you can all the time with the stock market. So it seems like they're trying to kind of split the difference between those worlds here by giving us these scheduled selling windows. So maybe it's every, let's say 6 months. Let's just pick a date. Maybe you can sell every 6 months if you really want to get out. And before then you'd have to pay some like super crazy fee. That's how I would guess this kind of thing is set up. And hey, if you really wanted to get into those worlds and really be diversified outside the stock market, it's fairly interesting that they give you a chance to do it here. We also can access these alternatives through money market funds. And so it's like a treasury bill, a CD, a pretty standard boring financial product here. But I'm guessing this would have more to do with like commodities or Forex or things like that. And then thankfully you can click into this and read a bunch more. If you really want to deep dive and decide if this is right for you, they'll explain what the alternative investments are. And then they'll even go into detail with each category. So you can learn about real estate funds. You can learn about commodity funds. If that term is really not familiar to you, think about commodities as like basic raw materials. So they give the example of precious metals, oil, gas, ag products, basic stuff that you use in manufacturing and that are pretty standard across like the world. Like corn is corn and gas is gas, and those things get traded around. And so you can be kind of a part of that industry by investing in these things if you really want to. And then you can access the world of Forex if you really, really want to. That's an option. And then, of course, private equity, venture capital, and private credit. I think for me, for all of these things, I think about it in a few different ways. First off, I think it is interesting that they've found a way to offer this to us. Not that I've been like dying to have exposure to that necessarily, but the fact that they can package this up in a way that makes it available to the public is fairly interesting. But, and this is a potentially big but, unless those industries were really hurting for more capital and willing to take on the added complexity and annoyance of dealing with everyday people with tiny little amounts of money, then there has to be a motive for them to be willing to do this. Like, let's use real estate, for example. If you're a real estate developer and you've got a pool of people that you can go to invest money in your latest real estate deal, because maybe they get a little bit better return than they would if they invested elsewhere. Maybe you get a cheaper loan rate than if you went to a bank. So you pull together your $25 million to build your factory or whatever the thing is. And even that is a bit of a headache because maybe you have 10 or 15 or 20 different people and entities that you have to go through to pool that money together. Now what SoFi is doing is saying, hey guys, not only can you do that, but you can also have 10,000 Joe Schmoes with $300 involved in this. So you might go from managing the expectations and the contract from 20 people, now all of a sudden to 10,000 people. There's no way the real estate professional developer person is going to want to do that unless there's some skin in the game for them, at least in my opinion. So my guess is that everybody along the way is going to make their cut of the deal, and we're all going to end up paying for it. SoFi's got to make money doing this, either through transaction fees and back-end deals from any way they would normally get money from us investing, or potentially another little added bonus for them facilitating this meeting of the worlds, right? They've got a pool of 1 million plus users. Then there's guys over here who are looking for investors or who are open to potentially taking on these kinds of investors. I think SoFi's going to get a commission for connecting those worlds. Then when those funds are created and there's this pool of money to go from that's funded from all of us million people who are going to jump into this, whoever's managing that fund is going to have a big hefty commission, I'm guessing. Then there's the end user, the developer person who's actually putting together the real estate deal, and I would assume that they need to be incentivized to go through the hoops of adding this complication to their life. And so whatever their loan rate is that they would normally get, I'm guessing that this has got to be cheaper for them. They've got to have a margin here where they're going to save 0.5% or 1% or something like that to be willing to jump through the hoop of doing this added complexity. And so all along the way, all of those people getting paid isn't going to come from anywhere but us. That's typically how these things work, right? The average person ends up paying the salary of everybody along the way because we're the end user. We're the person who's wanting to access these things. And outside of being an accredited investor and having connections with people and having a bunch of money liquid and ready to go, you wouldn't be able to do this. So we have to pay to play. So that's the thing that I'm most curious when I see something like this is, okay, it's an interesting product. It's fairly unique, but how much is it going to cost us in the end? So at the bottom of this page, they've got an FAQ section here, and they don't tell us how much any of these fees are. I tried to dig through other FAQs and I couldn't find the exact numbers, but they do say, depending on the specific fund, fees you may encounter include these. So you could have a front-end load fee, which is what happens whenever you initially invest. Then you could have a back-end load fee, which is whenever you sell your shares, they also get paid and you're paying for that. And then if you sell your shares at the wrong time, then you could have additional sales charges, apparently, because it happens within a specific time period. And then you can also have annual expense ratios, which those are very normal for investing in a fund. Like I would expect an expense ratio with any typical kind of fund that you're investing in. My guess is with these, they're actually higher than normal. I could be wrong, but that's my guess. I'm just so curious to see how big or nasty these fees are that I've got to try and find out more. So I've logged into my own personal SoFi account and I've just searched in this little search bar at the top, alternative, because I'm guessing that the funds that they support on here are going to have alternative in the name, or I can otherwise source them that way. So now I've picked one, the Longboard Alternative Growth Fund. Maybe they invest in surfboards. Not a lot of info about the specific ways they're doing this. All it says is they have an equity strategy, a futures strategy, and a fixed income strategy. And then I can't access a prospectus for this, unfortunately. Thankfully, they do tell us what the fees are. So I appreciate that. The front end load fee, just for you to initially buy in, you're paying 5.75% up front. Wow. The back end load fee for you to get out, 1%. And then the gross and net expense ratios are apparently the same, which is 2.24. So let's click into this and get a little bit more info here specifically about what this means for us. It looks like that front end load fee goes down the more you invest. And that's basically what I predicted here. You're paying a penalty for being an average person. If you're investing less than $25,000 at a shot, you're paying that full 5.75%. If you want to have no commission whatsoever, you've got to be incredibly liquid and you're probably already an accredited investor. And so you've got to invest over $1 million to have a 0% fee. Then the back end load fees, thankfully, are just for those of us who are impatient and do things kind of short term. So if you sell within a year, there you get the 1%. If you wait for the long-term capital gains kind of typical time period, which is over a year, then it's 0%. And then our annual management expenses are egregious on top of that, 2.24%. It says right here, these are fees paid by the investor, like you, and they lower your rate of return over time. I mean, if you do the math and you see even what a 2% fee does to your returns over the course of a lifetime of investing, it's egregious. It takes away something like 60% of your gains, and that's not factoring in the front end and back end fees. These are crushing fees. These are return-killing fees. I can't tell you how to invest because I'm just a weird guy on the internet, but I would never touch an investment with a fee that crazy in my life. If I'm honest, I actually already did. Back when I very first got started investing, I had a 401k account. I rolled it over into an IRA, and I talked to a friend who was a financial guy. I don't even know what he did for a living. He managed investments, right? And if you ask me, that was my first mistake because I just talked to a friend. A lot of times for these really important things in life, like money management, it happens a lot with money management. What is this about us? We talk to a friend of a friend. We talk to somebody we went to college with. We talk to somebody whose uncle we kind of sort of know. We don't vet these people in our life. We don't ask how proficient are they at their career? What's their track record? What kind of products do they offer? Are they worth working with? Oh no, I kind of sort of know him. Well, just because I kind of sort of knew this guy, it didn't stop him from selling me these A shares, these Class A shares, whatever the heck that is, which also had a 5.75% upfront front-end load fee. Then his explanation to me was, you pay this fee up front and then you never pay another fee again. If you ask me, I'm thinking that he conveniently forgot that there were also some kind of expense ratio fees alongside there. I'm thinking he's talking about an initial other fee. I don't know. It just was very incomplete, and he knew he was dealing with a total beginner here. I said, okay, man, that sounds fine. I mean, I didn't know how to judge what was fine or not. I just liked the idea of not having any fees to pay in the future, and so I went along with it. So this guy, the fund, everybody on the back end of this deal was earning these giant fat fees off of me for any of the money that I contributed, and I didn't realize how bad I was getting taken. It wasn't until years later that I dove into the world of investing, read a bunch of books, listened to a bunch of podcasts, learned a lot, and then had this shocking realization of, oh my gosh, I'm being had. I've got to get out of here. This is a terrible idea. For me personally, I try and avoid anything that's got fees over 0.5%. So if you totaled up all of the fees when it came to buying, keeping, and selling that last fund that we just looked at, we're talking about 9% if you're doing that just for the course of 1 year. If you kept it longer term, you'd be at 7 or 8%, and that's just getting started. And then over time, you're paying that same 2.24% all the time, just getting absolutely hosed. And so in an effort to be fair enough to assess other funds besides that one, I went back to kind of the SoFi homepage here, and it says we can look at their alternative investments in this one screen. So I clicked Explore, and my browser does nothing. So then I sent that same link to my phone, and I tried to click on the same exact box. Let's explore alternative investments. Nothing happens. Click Explore. I got nothing to explore. So both the desktop browser and the mobile browser didn't work to look at alternative investments, but it looks like the app does. So let's dive into this a little bit more and see what else we can find. We've got options to see them kind of broken out like they said that we could. All this whole top row are interval funds. So they're venture capital, private credit, real estate, all that kind of deal. And then we can learn something more about this kind of fund. I mean, our interaction with this is very similar to interacting with like an ETF. You send some money in, you let it sit there for a long time, hopefully you profit. Yeah, and it says right here, interval funds are geared towards long-term investors who may not need quick access to their invested cash. This is a less liquid option than a lot of our other investing, and so you've got to be okay with that. You've got to be okay with letting it sit there. And then they have a little incentive going on right here. For a limited time, all transaction fees for interval funds are waived. Oh boy, save us 0.5%, but they're still charging us a 2.7% net expense ratio. Gross. You could get in on Kathy Wood's ARK fund if you want to do that. A lot of people really love or really hate old Kathy there. And those expense ratios are worse. Yikes. All right, let's get out of interval funds. We can look at liquid alternatives. Let's check out real estate. Okay, so we've got 111 different assets. They've automatically sorted it by 12-month yield for us, trying to entice us with the numbers here. And they basically looks like we just interact with these like we would any other kind of fund. FIKMX, the Fidelity Advisor Real Estate Fund. So it invests in common stocks of REITs, debt securities, real estate entities, mortgage-backed securities, and its expense ratio is way, way less. But it just depends. This one is super high. You've got a crazy front-end load. You've got a big expense ratio. I mean, I realize I'm focusing a ton on these fees, but when you know that you're already in the hole by X amount, when you've got a fee that big, the fund has got to automatically overperform by that amount to justify it versus just buying buying something that has a very, very small fee or no fee. That's the way I look at it anyway. And I'm tempted to spend 30 minutes going into all these, but we don't really need to do that. If you want to look at the app, you can download it and click into any of these that you're interested in. But it basically just gives us these different options of funds that we can buy into that are in these sectors. This one focuses on commodities, other ones focus on real estate, yada, yada, yada. You get the picture. But from what I've seen so far, my suspicion has largely been confirmed, which is the fees make it, for me, not worth using. On a more positive note, I was really surprised to find out that you can get investment advice and general financial advice from their financial planners, and it's totally for free. So it says within the app or online, you can just click here, make an appointment, and discuss your own personal finances at no additional cost. And this seems like a legitimately incredible feature because you can talk about goals, you can talk about saving, budgeting, borrowing, investing, you can talk about insurance. And at first you go, wait a minute, why would they do this? Why wouldn't they charge us for this advice? And so if you're like me and you're a little bit skeptical, then maybe one of your first questions is, okay, if it's not going to be charged, then there must be some other motive. They're going to try and sell me something. Sofi offers so many different products. They're just going to tell me that my plan sucks, my life sucks, my budget sucks, my insurance is all terrible. The way I can fix all of this is by buying everything through Sofi, right? It says no. Our financial planners don't sell Sofi products. They are not commissioned employees. They're held to a fiduciary standard. They're going to make recommendations on our best interests. Like, what? I want to schedule one of these calls. I don't know if they let me record it and post the results, but this is like an incredible feature. I think for most people, having an opportunity to talk to somebody like this, who's a fiduciary, who's not going to try and sell you a bunch of products, who you can just chat with and say, here's what I'm trying to do in life. Here's where I am now. Tell me what my shortcomings are. I think that's a tremendous feature. This is like the best feature I've seen on an investing app this whole year. And so then my skeptical brain says, well, they'll probably just let you have one of these and then they'll cut you off for forever because, one 30-minute call or 1 hour-long call is all they can afford to provide. They're not going to sell you anything. There's no fee. So they're just going to give you the minimum. No, it says right here in the FAQ, how do I schedule a follow-up appointment if I've met with a financial planner in the past? You can use this link to schedule another call with a planner. Like, this is amazing. This is, if you're using Sofi right now and you haven't used this yet, I would say schedule an appointment. Get all the things here that they say that you need to be prepared and come to them with all of your questions. As much as I love your comments, the YouTube comment section under my videos is not the place to ask your very specific financial questions. This is the best place. This is so awesome. Maybe that's a future video. I've got to do this. And I'm not just a crusty old man thinking that someone's going to come take advantage of me. I've done a kind of call like this before. Actually, I've done 2 different ones. I did one with Personal Capital back before they got bought out and turned into Empower. And they kind of already have all of your info because that's the name of that service. You link all of your accounts, you track your net worth there, you track your returns. All that stuff was supposed to be made easy. And so whenever you apply to have an appointment with them, they just look at your account and they say, oh, I can see what you're investing in here. I can see how much money you have, how old you are. If you have some goals set up in there, they can see that. So they can assess everything right away. And surprise, surprise, you should let us manage your investments for you. Shocker, I'm not just going to opt into a bunch of fees so that you can go and invest in the same things I'm already investing in. Not worth it. Then we had another call that was similarly disappointing, but not quite as cynical. Whenever we talked to somebody who was through Fidelity, which is where my wife's 401k is hosted, we talked to one of their advisors and basically broke down, here's how old we are, here's what our mortgage costs, our general living expenses, our income, here's how much we have saved, all that stuff. And I don't remember there being any real useful feedback whatsoever. So that call was pretty much a bust. They were like, you got any questions for us? No, you guys marketed it to us. You said we should call you, so we did. Okay, well, if you don't have any questions, see you later. It was kind of a waste of time. There's a chance that could happen here if you don't come to them with specific questions because, hey, these are busy people. They've got other calls to make. They've got a life to live too. So I'd say get all your finances together and then come to them with, let's say, 3 specific questions and ask them. I should take my own advice. I should develop 3 important questions that I need to ask them about our finances too. Well, so far that's the highlight of the service for me, but let's check into more. We've got automated investing now to look at, and I'm a big fan of automation. I want things to be easy, taken off my hands. Don't make me do the work and the discipline of having to do this thing over and over. If I could automate riding the exercise bike behind me, I totally would. Just put me on there and let me do this. Unfortunately, exercise doesn't work that way, but our money can. So it looks like automated investing is an advertisement for Sofi's own robo-advisor, and it seems like they do all the typical robo-advisor things. They plan what you can be investing in. They automatically rebalance your account. So they sell things that have grown too much based on how much you've set up as far as where you want your money to be. They'll rebalance it back so it's the right proportion of stuff. They'll diversify things for you. They'll make your recurring deposits for you. Pretty standard setup with a robo-advisor. And this is curiously appealing to me too, because whenever we peruse this FAQ section, they've gone from labeling it a robo-advisor to calling it automated investing. And then they say down here that basically a robo-advisor is synonymous with automated investing because it's an algorithm algorithm that makes these decisions for you. In my experience, whenever you use a robo-advisor, like when you opt into Vanguard's robo-advisor, use Wealthfront, Betterment, any of those things, they typically have a fee between 0.2 and 0.5% to have access to this algorithm they've programmed. And so I came into this fully expecting that, but this says there is no SoFi advisory fee for automated investing. And it says they can help you invest in your taxable brokerage account, in your retirement accounts, basically the standard stuff that all of us would use. That's actually really appealing. I mean, in my experience, there's kind of two worlds of automated investing. The first world is a simplified version of investing that a service like Acorns offers. They ask you what your risk tolerance is. They ask you kind of what the goal of the money is. They try and connect some dots for you. And then as you invest, then it kind of does the rest of the work for you. And then there's the world of robo investing, which is typically more in depth. Like the robo is going to do more for you. It's going to make some more moves. They could potentially offer things like tax loss harvesting. Like it's a step up in complexity and they charge you for that. But it's wild that they don't have management fees for this. And if you have a question about it, you can just call a SoFi person. You can talk to one of their investment specialists that are all fiduciaries apparently and answer your questions. All right, fast forward to 10 minutes later. I've looked for a more complete feature list than these 4 things here, but I've failed to find one. I even started an account and filled out my information, and it recommended me a portfolio, but it didn't give me any more information or promises about things like tax loss harvesting or anything more advanced than basically what Acorns gives us. But the cool thing is they're not charging us a fee to do that. So for the person who doesn't want to have to go out and pick an actual investment for themselves and say, I want to invest in 3 or 4 different funds and I'm going to pick this much of this one and that much of that one, you can just say, look, bro, I have no idea what I'm doing. Pick some stuff for me and let me be done. That seems pretty interesting. As long as the stuff they pick isn't a super high expense ratio, this could be really great. I'm pretty happy with that. And then if you start an active investing account with them, then they do have like a transfer bonus right now. So if you had an investing account with somebody else, you transfer it over here to SoFi, then you just get a cash bonus for doing that. And this is a really long offer period. They've got it going from April 16th all the way through the end of the year, December 31st, 2024. And it's not the best bonus in the world, but it's more than nothing. Obviously, the bulk of the bonuses that are enticing at all are above the $250,000 mark. Like you've got to be depositing a massive amount of money to see a big bonus. Let's say you've got $5,000 in a Robinhood account or something like that, and you want to move it over here. Hey, $100 bonus, that's not bad. That'll get you at least 10 burritos. 20 burritos if you transfer over around 50 grand. 50 burritos if you transfer between 100 and 250. Not the biggest bonus I've ever seen, but a lot more burritos than 0. So I like that. And so far, all of that has typically been oriented towards the taxable brokerage side, just like a basic kind of investing side. And then when you click into the IRA section, then they specify everything here for IRAs. So they let you open a traditional IRA, a Roth, or an SEP IRA, which is pretty cool. They tell you the differences between all 3. They lay them out again here. Screenshot this if you want to know the differences. And then the same kind of features that we got with our other taxable brokerage account, we also get here. So no fees or minimums. You can diversify in a bunch of different ETFs, or you could have a goal-based portfolio with your automated investing, or you can call them and get some advice. So pretty cool. All that same stuff applies to an IRA too. Now it's time to discuss another feature that I'm skeptical is actually in our best interests. I think it's mostly in SoFi's best interest, unless they had people beating down their doors saying, give us IPO access. I think this is just kind of a sexy thing that the general public thinks is cool. They think they could potentially make a lot of money doing it, even though it's probably ill-advised in the end. So they've given it to us. Early IPO access. Active members can participate on IPOs before they trade on an exchange. So here's how you'd have to do it. First, you can just look up and apparently see what IPOs are live. Let's see if I can find one. Well, I found the IPO screen, but I'm in this endless loop of verifying that I'm a human. And so that's pretty annoying. This will be the 3rd time that I've checked this box claiming I'm a human. I think there's a bit of a bug in their system. It looks like you have to kind of opt in to the IPO process. Then they'll notify you when an IPO is live. Then you have the option to jump in on it if you want to. Yeah, it says here on their website, select the IPOs you'd like to participate in and submit an indication of interest. Then after your indication of interest is submitted, you'll be notified to confirm your buy order to secure your shares when the transaction settles. I also appreciate that they've laid out a bunch of benefits and risks here because yeah, I mean, there is a potential benefit. You know, if you buy into the future Apple company that skyrockets in price over time, you could profit a lot. But there's no guarantee of that. And I'm guessing that the general kind of perspective on this is, well, let me just get in super early, buy it at $30 a share, then day one it goes up to $50 a share and I sell. In my opinion, anytime we've got a plan to make a quick buck, it's probably a bad plan. Just saying. And I feel like my presumption there about somebody flipping their IPO purchase is warranted because they have a whole IPO flipping policy. They say that if you sell your IPO within the first 30 calendar days post-IPO, that person will be limited in their ability to participate in future IPOs through SoFi for a defined period of time. 180 days from a first violation, 365 days upon a second violation, and then permanently in the event of a third violation. It's kind of like a parent when you know that your kid's going to do something bad, like you can see that look in their eye, or you can tell like, oh, they're shockingly quiet and they have a knife. This is not a good situation. I need to go intervene. It's like SoFi can tell this is what people are going to want to do. They're going to want to buy it and sell it within 48 hours, I'll bet, and think they're going to turn a quick profit, and they're set up to penalize that. So I appreciate that limit. I like that. All right, 3 more features to talk about. Fractional shares. I love this little visual here. A little slice of bread when it's the stock here. You don't have to buy the whole loaf. You can just buy a slice of bread. You're probably familiar with fractional shares. You just get to buy a piece of a stock. You don't have to save up for the whole giant chunk of stock. You can just have $5 worth or $10 worth. And I like this because it allows you to get started with investing as early as you can without having to wait and save up money. So maybe you want to invest $5 a day into Amazon. Hey man, you can do it. Jump in. I think once you go fractional shares, you never go back. And then I was surprised they had a whole category here about ETFs. And then I realized they have their own ETFs. So they're marketing you to use their own ETFs because they're going to make more money doing that. Hey, I can't blame them. They're a business, right? ETF is just an exchange traded fund. It's a big mix of different investments all put together for you. And they've got some pretty kind of popular themes. They've got an S&P 500 one. They've got mid-cap 500. They've got ones that score high on social scores. They've got one that's meant to produce dividend income. I'm a fan of an ETF. I'm not angry with them for promoting their own. Makes sense. And this is interesting. They've got a crypto partner hub. So they're not claiming to have crypto themselves. And if we scroll down here, they've got these different platforms that you can kind of link with. And then in top questions and answers, it says, what happened to the SoFi crypto account? Aha, December 2023, SoFi's crypto services came to an end. I think a lot of crypto services came to an end around that time. There was a lot of stuff imploding. There was a lot of bad news in the crypto world in general. And so I think a lot of services that thought they would just jump on this crypto bandwagon and try to make a bunch of money for it realized that even the exposure of being involved in it was just too much. And so a lot of different people backed out, including SoFi, which is probably a wise move. So let's zoom out now that we've kind of reviewed all of the main features on their website when it comes to SoFi Invest, and talk about their service in isolation and compare it to other apps and see, is this service really worth using? Is it not? How does it stack up? Well, I would say even in isolation, not taking into account all the other services that link with SoFi, all the other things they offer, I'd say it's actually fairly compelling. They've got some good features. They've got a pretty decent interface. I'm disappointed that both the desktop and the mobile browser work so poorly. It seems like the app is actually the most reliable thing to interface with. Hopefully they fix that in the future. But overall, I'd say it's intuitive. It offers us the kind of baseline features that we need, whether we're somebody who wants to pick what we want to invest in or if we want them to kind of guide us along the way. They offer some goofy options in there when it comes to alternatives and IPOs and whatever else, but by no means are you required to get into that stuff. And so it's easy enough to avoid that stuff and just focus on what you do want. So after this initial kind of look, I'd give it kind of a middle of the road score. It's a C+. It's definitely not bad, and it could be worth using if you like it. But, and we have a big but here, it's not worth examining in isolation because SoFi does a whole lot more than just investing. They started as a loan company and operated that way for like 8 years first. Then they've expanded out into investing and credit cards and insurance and all these different things. Then when I just opened the app here a minute ago, they bombarded me with all this stuff about SoFi Plus, which I'd never heard of. And it seems like pretty great features. You get a welcome bonus of $50 to $300. You get 2.2% cash back rewards on their credit cards, which is really handy. 4.6% APY on your savings. You get double reward points on certain activities. You get a discounted rate on a personal loan. And so my initial thought was, okay, how much is all that? Well, as it turns out, it's $0 as long as you set up direct deposit. And I realized that Acorns is also $0 if you set up direct deposit. They benefit enough from us shoveling money into their service that they don't need to necessarily charge for it as long as we have that direct deposit happening. And I think if you love the service and you know you're going to use it anyway, this is a great hack. Just direct deposit the money because you've got to send it somewhere, right? You're going to get it in your bank or you're going to get it in this bank. So do something with it that benefits you, and direct depositing it to get extra features is a good option. But I'm also annoyed that you have to direct deposit the money because I've always been the kind of person where I want to choose exactly where my money goes and how. So I've never loved the incentivization of a direct deposit, but that's just me, one of my pet peeves. But the potential to leverage even just like half of what SoFi offers and have all that stuff in one place for you really bumps up its score in my book. I'm not a big proponent of all the different kinds of loans they offer because I'm not a big proponent of loans. I think by and large, we should avoid loans. And so all these very specific kinds of loans, I feel like are a marketing ploy to make you think that this is going to be really tailored to you and help out your life, when really probably helps us more to just avoid the loan in the first place, if at all possible. But if you've got to have one, man, they got a ton of options right here. We went over all the investing features. They've got the 2.2% credit card. They've got some banking options for you, which is a nice place to let your money land and get 4.6% interest potentially. They've got insurance products. And then on top of that, they've got other stuff. They've got estate planning. They've got budgeting and spending tools, credit tracking tools, property tools, and I love these kinds of tools. I feel like if you're willing to get this thing set up and have this kind of dashboard for yourself, you don't have to build a big spreadsheet. You can track your net worth, your credit score, your spending. It can show you what your debt looks like and how much you're paying it all off. It even has a little way for you to link your property account and your vehicle here. So when we combine all those features together and the availability of all that being in one place, I feel like there's a boost in that convenience factor. It's really annoying to have 30 different logins, to have your investing account here and there, and your banking account over here and this over there, and you'll know what I'm talking about. Anybody who's fully adulted for the last 10 years or more knows it's a lot to keep track of. It's very easy to lose track of that extra subscription payment over here, or what's that account number over there, and how are things doing overall. To be able to put all that in one place and collate that data and zoom out, I think is a really powerful financial tool for us. So to simplify that by having a bunch of accounts in one place, and to simplify that by using a tool like this, I think is a massive feature add. This is the kind of thing that Acorns and Robinhood and M1 Finance have got to roll out and add. They don't have to offer all these insurance products and loans and everything else like SoFi does, but these kinds of tools that track our net worth, ability to talk to professionals totally for free, I mean, these are some really incredible features that SoFi has that not that many people are offering at this time in terms of other basic, simple investing apps that are built for the retail investor. And so in the end, I've got to give SoFi a pretty high score. I mean, they're B+ at least, if not A score in terms of investing service. One thing that I don't like about them that's still conspicuous despite all of these features is just that there's a lot. There's a lot for them to market to you, to sell to you, for them to claim that yours isn't as good as ours, and so you should switch over our insurance. And so even in the app or on the website, you're kind of berated at all times with like, you should use our service instead. And nobody likes that. I mean, it's annoying. It's like, hey man, leave me alone. Let me just manage my money. Stop trying to sell me stuff. So if there was some way that you could get into settings and like turn off all new offers, I would love that, because I can only imagine how many things I'm going to get in my email inbox now from investigating this stuff to make this video for you. I'm probably going to get 15 emails in the next week saying I need to take advantage of all this stuff that I started, and I'm not actually interested in any of it. Just let me look at it. But I feel like overall, I am pleasantly surprised at all the things that SoFi offers, how well they do them, and overall, how low the fees are. If they turn down their marketing, and if they're more upfront about how much these fees are and how negative fees are whenever it comes to your overall investing success as a person, then I would have more respect for them and a higher score. But for now, I think it's worth using. This video is in no way sponsored by SoFi. They have no idea who I am. I saw in the app that you can have an affiliate link, and so I just copy and pasted that into the video description. If you want to sign up with them, then please use my link, because it does help me to continue to do this for you and make videos for you. I need a lot of help right now because I just got started doing this full time, and it's been rough so far. So any support you can give by signing up with my link would be hugely appreciated. If you want to see the best investing app for beginners, then watch this video next. And otherwise, YouTube thinks that you would love this video for some reason. I don't know why. YouTube's like, hey man, this person, they're built for this video next. So check one of these out, and I'll see you guys tomorrow. Bye.